Jeff deGraaf is chairman and head of technical research at Renaissance Macro. He joins us once again now. Welcome back.
Thank you, Scott. Real quick, if I could. It's my mother's birthday. I'd love to say happy birthday to my beloved mom, Cindy. So happy birthday, Mom.
All right, happy birthday, Mom. We wish you the best as well. Let's talk about these breakouts. Regional banks. Why is that significant?
Well, look, regional banks are part of the lifeblood to small cap, right? So small cap tends to be much more dependent on regional banks and the benevolence of their local bankers. And so, seeing the breakout in small caps and the breakout in regional banks is good news. It usually is also good news that the yield curve is not going to get out of control and that probably shorter rates are in the offering. And then just to put a little pin in it, it suggests, too, that some of the concerns around auto loans and the credit quality of the loan books is probably in a pretty decent spot. So there's a lot of messaging that can come from regional banks, and I think it's positive here.
Well, that says something about the strength, not only that we've already seen in the small caps, but potentially what they can do from here.
Look, small caps, if you look at the relative performance, they're outperforming the Russell 1 on a trend basis, so not just, a few days. This is, long-term trends, the 50 days through the 200 on a relative basis. It's also true for the NDX, right? So all the consternation, I mean, you remember this, right? People were just complaining about the narrowness of this market. And really, we've had a elongated underperformance by these Mag 7 names, which in fact got oversold for the first time earlier this week. So I think it's good news. I think it's healthier for what we're seeing for the overall market. And all these complainers about breadth are finally getting it, but nobody seems to be championing it. So I will.
You think that some of these moves that we've seen in the mega caps over the last couple of days, and obviously today running into these prints next week, is saying something? This is not just a couple-day thing, you don't think?
Well, I don't, in terms of being oversold, I think they're going to bounce. And I don't think these are trend changes, but I think the relative performance is, a more elongated period of underperformance. I don't like software, so that's one area, and they are oversold for sure. So I don't want this to be a tactical call. But when we look at the tops that are in place in some of these software names, they certainly make us uncomfortable. That's not the same. That's not happening in semiconductors, which actually look better. But I do think that you've got this transition that's taken place, and again, I would view it more healthy than I would distressed.
Wait, so nothing in the charts tells you that the really dramatic outperformance of semis at the expense of software is about to change anytime soon?
No, other than tactically software is oversold. But, again, we could get a 10% reversion, but it doesn't change the chart.
The other thing I was just talking about with our prior guests is this incredible move in gold, pushing 5,000. Where's it going from here? What do the charts suggest?
Look, there's a graveyard at one end of Wall Street and a river at the other, and that's from, full of people that tried to call a top, right? So I'm not going to do that. But I will say that if you look at the alpha that's been generated in gold over the last roughly 3 years, we are now matching the previous point or the previous high, which was back in 1979, 1980. So this is bubble territory. What we're suggesting to our clients is dollar cost selling, that you start to skim just, incrementally pieces off every week, every 2 weeks, whatever the case may be, to book some of those gains, because clearly it's unsustainable. And you're very likely, the probabilities go up that you're going to get a 30 to 50% correction in these moves over the next 6 months, I should say. So for us, it's very hard to call the top, so we just have to be systematic about it. 30
to 50% correction in some of those moves. Are you talking about like gold and silver? I'm just curious as, what in the macro environment or the policy-making environment would lead you to believe that. As long as that remains somewhat erratic on both fronts, aren't gold and silver going to continue to catch bids?
I think there's an underlying trend to that, but what we're talking about is sort of this unsustainable move higher, and that's where you create these air pockets. So it has nothing to do with the trend and where we're going to be 3 years from now, but I just think in the very near term, it tends to be unsustainable. And what the parabolic moves really suggest is you're creating this vacuum. You're sucking in the marginal buyer, and there just won't be anybody left to really support that. And that's the danger. Again, oversold, we should have a conversation when they get oversold, because we'll probably be buyers, but I think that'll be 30% lower than where we are here.